So, hello to you all. Today I'm going to make a presentation of the latest update which I have for the Calculus product. So in the end I'd have decided to combine together both the correlation from the Calculus and the Calculus Dynamic into one product under the the Calculus MTF. So now the second version that we have from the Calculus MTF is going to have inside, as we can see, we are going to have the correlation product. If we want to use it, we can disable it and we can have the standalone version without correlation. In this case, for example, if we are trading, for example, ATH. However, if you would like to trade a correlated pair like ATH, you can use both with the candle data from the BTC or or just standalone data. And at the same time, I have applied a new logic inside, which is related with the halving and the all-time high calculations. I have posted this link as well in the chat. It's an amazing idea, and it's similar to what I have spoke the other day, in my latest stream. So the main idea is that when we are going to have a halving period, so we can see, for example, from the initial of the halving, for 1 year approximately, we are not supposed to take any short trades. And at the same time, once we reach an all-time high, like for example this place or this one or this one, we are not supposed, you are not supposed to take for 1 year and some months approximately any long trades. So when we are in a big correction, you are supposed to take mainly the short trades, and when we are in a big bullish movement, which is in general announced by the halving period and a little bit before that, you are supposed to take mostly long trades. So with this in mind, I have adopted the Calculus product, and the difference is, like, for example, so let's go without any halving. So let's take all the short trades that we have available since with all the data that we have. And we can see that initially, at least in this case, on 2016, we would end up barely in positive, and in 2020, for example, we would end up in negative. And we can take a look at this chart. We can see in 2016, from July until the end, so for like 1 year and a half, we will have only long trades. And if we are going to take a look here from July 2016, so more or less we will have these months, and then again, these other months, of losing. So not the greatest period, of going into short. And the same, for example, from May 2020 until until the end, until the other May. In the case, for example, for the halving of May 2020. So it's kind of the same situation. I believe when we are going to be close to 2024 and we are going to be in the halving period of 2024, I believe as well is going to be a predominant movement, and it's not going to be worthy to start entering in the short positions. And the same, for example, from the so the difference it would be, you can see that if we would go without the halving ATH calculation, in this case we are going to have 1,200% profit in all this period of time. But if we are going to allow the halving, you can see that we are going to have a little bit less actually. So we are going to have the 1,000, but the drawdown it decreased by a huge margin. So the biggest difference is going to be in the drawdown. So in this case, we are going to make stability, we are going to look more for the stability and consistency than just necessarily trying to increase the profit. And we can see that we increased from 40 to 50% to 51% in this case, and as well the drawdown, the drawdown from 32% to 24%. And not just that, if you are going to take the total net profit by the max drawdown, you can see as well that we increase it by a huge margin. And the same situation in this case, for the long. Like for example, if you would go with the long without halving, you can see that, for example, this year in 2020, in 2018, and then as well, but we don't have the data here, in 2014, are the moments, you know, after the all-time high, so more or less around 1 year and a couple months, you know, from the all-time high. So like for example, December 2013, December 2017, and December, for example, 2021. So all these periods for like 1 year and a couple months, you know, going in along in general is not worthy. And the difference, for example, from 146, you can see, and at the same time, 38% drawdown, 39%, while at the same time the total net profit by the max round it would be around 15 by 5, 3, so 1 divided by 3, so around 33%. And we can see that if we are going to apply the halving, we are going to have more or less the same profit, but the drawdown is going to be reduced by a huge margin. Now we have 14 millions by 1 million, and in this case, for example, it's going to be 1 divided by 14, so it's going to be close to, let's say, let's round it a 10%, you know, drawdown compared to the 33% that we had before. But at the same time, take a look at the profit factor, you know, from the 2.4, now we go with 7, and not just that as well, but we reduce the trades and we increase the probability of these trades, so maybe even leverage worthy, you know, in this situation. So overall with all of this, you know, I have found out that like I said, it looks to be much more consistent. And yeah, if you don't want to use it, you can just disable it, and in this case you are going to have the initial logic, which was before as well. And like I said, this new update is more or less supposed to be as an you know, as an alternative solution, you know, for that diversification of your portfolio. And now, because I spoke with this one, let's go back, you know, a little bit like kind of to the default settings. So let's imagine that you would want to use, in this case, the default version of the Calculus Dynamic. So for the default version of the Calculus Dynamic, it came from the Calculus Logic. So in this case, if you are going to use the Calculus Logic and without any correlation, in this case, for example, you can see that if I will apply, for example, the Calculus Dynamic, you are going to see that you are going to have the same results. So you can see the 1 million % profit to 38, 47, 48 to 56.2, and we can see that if we are going to just use the dynamic, we are going to have the same values. At the same time, if you would like to use the correlation product strategy, so in this case, the correlation product strategy is coming by having calculus, but at the same time with the calculation for another candle. So in this case, we will calculate with another candle from the BTC, and now we would have the correlation. And at the same time, like if you wouldn't want to go with the correlation, pues then in that case, you know, it would happen the same scenario. You will disable it, for example, and you are going to have the dynamic version. So the main difference as well with the MTF compared to the other tool is going to come as well, you know, from the dominance logic, because so when we are going to use the multiple logic combined, we can see that in this case, for example, if I will use the multiple logic combined from the MTF compared to the multiple logic combined from either the dynamic or the correlation one, so if I will go like this, you can see that the MTF version is far more better, especially for this year. Like for example, this year it would be 57.5%, and for example, in this case we would have only 80% for this year. So, you know, overall, you know, that's the new addition that I would say as well that is being present in the MTF. So the new calculation, you know, on the dominance logic. So I would suggest, you know, from now on to start take only this product, and from this product, you know, diversify and put all of them. Like for example, so let's say you would have a BTC, but on the BTC you would have, let's say, multiple variants. So like for example, you can use so this, for example, it would be one. This, for example, only with calculus, it would be another one. With or without halving, it doesn't matter. That's up to you if you want to go with the halving or not. Then at the same time, it would be for the same for the ATH. So if we are going to go on the ATH USD, we are going to have different solution. So we can go, for example, with the normal calculus logic, with correlation, without correlation, at the same time with multiple logic combined, and at the same time if you want multiple logic but with correlation, That's be another one without halving or with halving. So we're going to have, you know, more and more probabilities and ways to diversify these products. At the same time, you have to take into account that this max track down that we are going to have in the case of the ETH, it's a little bit suspicious, but this suspicion is coming from 2017 because we have a candle that literally, well, let's go in 2017. It was a scam candle that literally had a 99% movement in that situation. So let me find it. Like it was somewhere. No, it doesn't allow me to go directly, but I will go like this. So you see this candle here, this one. So you see this candle on 20 June, it literally went for 99%. So this is where this value of the drawdown is coming from. But this is doesn't tell you that the strategy has this drawdown. If you want to take a correct approach, you can just go from 2018. And in that case, you are going to have a much better approach for the drawdown. And you can see it can be, for example, 42% for this type of settings. Or for example, if I would use calculus logic only, it would be 46%. But if I would use without correlation, it would be 57. And if I would use, for example, this one without correlation as well, it would be 50%. So you can see overall, of course, it's a little bit higher than the BTC one. But yeah, it's another way, you know, and new solutions which you can use, you know, for this product. And of course, if you are going to have correlation, like for example with Bitcoin Cash, if it's going to be, for example, one of them, then you can do the same. You can use the correlation from the BTC and use the same settings. But I don't know, you can try, for example, from this other one, some other pairs. I have no doubt that you can find something around here that can work with the correlation. So yeah, especially, you know, especially if you are going to take products which have more candles available, especially from 2018, 2019 until present, like for example ALA or even ION. I saw it, no, Acro, Anchor, like for example Anchor as well, Bitcoin Cash, of course, BNB, others, I don't know, DOT, and so on, you know. So you can find, you know, you can find some amazing pairs to be used for the correlation. So yeah, this is the latest change. Of course, as an alert, you have the same like with the other one. In general, if this bug appears, you just have to go in styles and disable the lines. I don't know why that disappear, but yeah, for the alerts, we always have, like for example, in this case, since on the settings we have the alert for short dynamic exit on the lowest low, highest height. That means that, for example, if we go long, we will need for the long a long entry, a long exit. So we will have a long entry, a long exit. But if you will go on the short, you will need a short entry, a short exit, and at the same time a short dynamic exit based on the LLHH. That's going to be, you know, for the alerts. So yeah, this is more or less, I would say, all the content regarding the new update of the calculus. So yeah, but still, if you have any other question, please let me know. Thank you all for watching and see you next time. Bye bye.